Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Carter Glatt, CEO of Dune Acquisition Corp. Carter, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill, so much for hosting and inviting us.
All right, you got it. Tell us a bit about Dune.
Yeah, so Dune Acquisition Corporation is a blank check company. We were founded and went public December 2020 in an upsized IPO. We raised $172 million in gross proceeds. We're a software and fintech focused SPAC. I think what's important to know about us is that we've been in and around the SPAC market for several years. So we really know how to execute within the framework and the model. So really excited to be here, and thanks again.
So Carter, what types of companies are you looking to target within the tech sector?
Yeah, absolutely. So software as a service is our prime and core competency. Especially during COVID, we believe that recurring revenue is an important thesis here. The ability to continue to scale and grow that revenue at an exponential level and to continue to compound and deliver shareholder returns really is executable within a SPAC model attracted by the software vertical. So we think that there's a large gamut of opportunities across both vertical, horizontal, and infrastructure software. So we're spending a lot of time there. My board also has a very strong focus in terms of financial technology. They have a very strong pedigree in terms of payments, so it's a space that we feel like we know well and is also ripe for disruption.
Do you expect the strong trends that we've seen with software as a service to continue on the other side of the pandemic?
Yeah, absolutely. So software as a service was one of the fastest growing components of all the major sectors and segments prior to the pandemic. I think you saw a really strong tailwind into the pandemic just by virtue of the recurring revenue. There was stability in that, and people like to invest in growth. I think it's going to continue to be a safe harbor and a very good place to continue to invest in. I think the COVID has allowed for continued disruption within the actual segment. So you're seeing these new novel technologies come into play and into focus. So that being said, it's going to be very investable today and for tomorrow.
Why do you consider SPACs the next generation asset class?
Yeah, absolutely. So I think SPACs are the next generation asset class, and they're here to stay. 2018, 2019, there were about 10 to 20 SPACs. Obviously, due to COVID, 2020, we saw about 300 issued, 450 issued in early 2021. So people recognize that it's a product, it's a capital vehicle that can be around for about 18 to 24 months. It's deployable. What I think is really important about a SPAC and uniquely differentiated is that it's a structured vehicle in that you're structuring a merger and acquisition transaction, which means that there's a lot of benefits and scenarios that you can do within this framework that you cannot do via direct listing or a traditional IPO. So that being said, I think it's here to stay, and I think it's going to be a preferential investment alternative for a lot of target companies going forward.
All right, Carter, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.